Welcome back. This is Robert Newstead from Guardrail Finance. And today the discussion is going to be around real estate and how real estate is the long game. Honestly, I know that a lot of people make money in the short term on real estate with fix and flips, with shorter term holds, with unexpected appreciation or some rapid value increases in ways that maybe were expected or weren't expected, and then they were able to take profits. I know I've done it. I've been part of investments where we've taken profits. I've been in part of investments where we've refinanced out our equity multiple times over. I have been involved in transactions where we sold an asset for multiple X's of what we had originally paid for it very shortly thereafter. But I think that's the exception and not the rule. I really do believe that real estate is a long game. Yes, you can get current cash on cash returns, and depending on where you are in the world, those can be low single digits to high single digits generally. Sometimes you can get lucky, at least in the past, and have returns that are in the low double digits. And then the other thing that you get with real estate, which makes it sometimes feel like it's not a long game, is your overall return. If you do sell a property, your IRR can be very big very quickly. And so it looks like every deal should be that. But quite candidly, I have only lost money on one deal so far. And that was not a deal I was a partner in. That was a deal where I was an investor in, and there was another partner, and I lost that investment. I have broken even on one deal, meaning I call it broken even. We made 3% over a 3-year hold period. And so that was 1% per year effectively. And I've had some other deals that generated about a 5% annualized return. Now, the other deals I've been invested in have all been in the teens or higher. So I've had IRRs that have been greater than 10% in a number of cases. Actually, most of the investments I've been involved in have been in the 10 to 20% range. I've had a few deals that have been in the 20 to 100% range, and I've had a few deals that are in the hundreds in terms of an IRR. Now, that sometimes can make you feel like that is not a long game, that's a short game. And I would say, again, that's the exception and not the rule. The other thing you get with real estate that sometimes makes it feel like it's short game is the tax shelter, because the tax shelter is an annual return. But over time, that tax shelter can disappear. But there are investors who will invest based on shorter value add and tax shelter. I also would say that those are good strategies when you can actually reap profits. It's not a bad deal to do it if you don't think that the asset is something that you want to hold for the long term. However, real estate is a long game. If you look at a lot of the families that have been investing in real estate, they've been doing so for generations. And there's a reason for that. It's a physical asset. And that physical asset generally isn't going anywhere unless there's some exogenous factor, natural disaster, something like that. And I will say, when I was living in Europe, it's interesting, most of the buildings that you see, the younger buildings are in the 1900s, early 1900s. So I was living in a building that was built in 1906, and that's 116 years old as of now. And there is a church that was in that town where Mozart played in 1766, and the church had actually started being built in 1100. So those are some old properties. In the US, we're a younger country, obviously, but the same thing stands in New York, in San Francisco. There are buildings that are older, and a lot of families have owned those for a long time. They become generational assets where they get passed down from family member to family member to family member. And that is really more of a long game. You also get an inflation hedge. So a physical asset like that is earning income that you can add value to, does become an inflation hedge. So in times when leases roll, you can bring those leases up to market and roll with that, and then ride the valuation increases up. And a lot of times that becomes an inflation hedge over time. And for those generational players, a lot of times passing on those assets becomes not only a generational play, but it also becomes an inflation play. It becomes a tax shelter play. It becomes an overall return play, an overall cash on cash play. Plus, you can add debt to those properties. So the next generation that acquires the asset can put debt on the property and lever the property up and take some of the equity out to go use elsewhere, whether that's for their lifestyle, whether that's to invest in other assets, whatever the case may be. That becomes the long game. Another thing that real estate shows is relationships. There's a lot of families that have been in the real estate business for generations. And so the relationships also pass down. You have a child who was the son of a real estate investor whose contact was a sponsor doing a good chunk of their real estate investments. That father is going to introduce his son to the real estate sponsor, and maybe that real estate sponsor's son or daughter also is a real estate investor, and then they take over that business from their father, and the relationship continues. And so a lot of times real estate is about relationships. It's about which brokers do you know, which financiers do you know, which leasing people do you know, which property managers do you know, who can give you access to transactions. And so that becomes a long game too, especially when you're trying to build up your wealth over time from a family perspective, from a generational perspective. And then it comes into, I already mentioned inheritance briefly, but with inheritance, if you were teaching the values about money, about investments, about being a financial steward to your heirs, and they inherit those assets, most of the time, at least for a couple generations, that sticks. And so you can have multi-generational asset owners. As time goes on, that may break down a little bit, but then someone has to realize that along the road and then maybe set it up as an organization that takes care of the family as well. And I've seen that in many cases too. But the fact of the matter is, real estate is a long game. Real estate's a long game from every perspective. If you have money that you're trying to put out in the market, you are looking to how can you maximize your annual cash on cash every year by investing? How can you maximize your overall returns over time for the money that you're investing? How can you shield your taxes to the best of your ability with real estate? That becomes an over time discussion. You want to be able to beat inflation. Real estate's a good hedge against inflation. It's also a physical asset. So generally speaking, it's not going anywhere unless there's some real exogenous factor that happens. Real estate's a generational asset. The relationships, generally speaking, are long-term relationships with a lot of real estate families, I will call them. And then you have inheritance factors where you can pass down the assets to your heirs and they can get a stepped up basis and thereby increasing their net worth without increasing their tax base. So I hope you also recognize that real estate is a long game. It's a relationship-based business, but it can be a generational business for you and for your family if done right. So hope you like this. Feel free to like, share, subscribe. Look forward to seeing you on the next video. And until next time, let's continue growing our passive cash flow and net worth together.